Hi, my name is Scott Broaddus, and for the past 6 years, my firm has been the investment advisor to the SCRS 401k plan offering for its member businesses. Given the market volatility over the past month, I wanted to take a few minutes and provide what I view as an overview on what's going on, what types of businesses are impacted the least and the most, and if you are an investor, an owner, saver in the 401k plan, what are some of the key items that I would be thinking about if I were you? So first, I wanted to provide kind of what's gone on this year. This is a performance report of the largest 500 businesses in the United States, the S&P 500. And since January 1st, that index is down by 12%. The majority of that decline has come since March. And then ultimately in April, when President Trump announced the tariffs that would start at a much higher rate than people were anticipating. We saw a strong decline. And then on April 9th, we saw a 90-day announcement of a pause on those while negotiations could occur, snap back in price. And then more recently, the executive branch's discussion on the independence of the Federal Reserve and what should happen with Jerome Powell has left a lot of questions about what will happen on the Treasury marketplace. The types of businesses that make up this S&P 500 are broad. They're diverse. They have different types of customers. They sell different types of products that are out there, and they don't all move together. So as an example, a basket of consumer staples, and consumer staples are items that people need to buy in good times and in bad. And so if there is uncertainty in the marketplace, if there's fear, if there's worries about recession or job loss, then consumer staples become important businesses that will continue to keep their customers. So top holdings in an index like this will be Walmart, there'll be Costco and Procter & Gamble, Kroger. And you'll see that compared to the S&P 500, which is down 12%, this consumer staples index is actually up by 3.7%. So in fears about a recession, you want to own businesses that will continue to keep their customers in good times and bad. When we talk about tariffs, you also want to consider businesses that will be U.S. owned with U.S. customers that do not have to import large amounts of their items. So an example would be utility businesses. Duke, Southern Energy, Dominion Energy are all businesses that are based in the United States. Their customers are in the United States, and a lot of that manufacturing has already occurred. Okay, and you'll see that those businesses so far since January 1st are up by 1%. A very different industry, but similar idea, is the U.S. insurance business. Geico, while it's owned by Berkshire Hathaway, if you use that as an example, Geico does not have to manufacture large amounts of items. They don't import rare earth materials. They don't have to build huge facilities anywhere. They're largely a service business. They collect premiums from customers, they hold on to those premiums, and they turn around and pay them out in claims. And so there are many different insurance businesses that are out there, but primarily in the U.S. marketplace, they are insuring U.S. items. And so the performance of U.S. insurance businesses have been much stronger than the market as a whole. On the flip side of all this, we want to also think about companies that will be the most impacted in uncertain times. And so one of the best performers of the past 3 years has been the technology world, that Magnificent Seven. So that's Amazon, Microsoft, Alphabet, which is the parent company for Google, Tesla, NVIDIA. So far this year is down over 16%. Growth companies will drop more in a recession or uncertain periods because we have anticipated that they will grow very quickly. And the thing that we are realizing, and you will see in uncertain times, is businesses will think twice about what they invest in. They'll think about slowing their growth. They will think about ramping it back or waiting to see. It is very difficult for a business to grow as quickly when times are uncertain. The other area, and we'll look at the top holdings here, are really the opposite of consumer defensive. This is consumer discretionary. So think of eating out, think of going on vacation, Think of booking concert tickets at something like bookings.com. Okay, Royal Caribbean, going on a cruise, hotels, Hilton and Marriott. These are all things that you can toggle up or toggle down. So if tariffs stay in place, if we use more of our monthly budget at the grocery store or buying the things that we have to, we have less that's left over to shop at Nike, to order from Amazon, to buy Starbucks every single day. And so those businesses we would expect to see go down more. Since January 1st, down 20% versus the S&P 500. Okay, so US businesses may not be directly impacted by tariffs. Starbucks, as an example, like that's not going to be a major import issue for them. But if imports or tariffs are impacting other phases of your life, then that's going to be less if you are a consumer discretionary type business that relies on consumers having that extra money at the end of the month. And then the last chart that I just wanted to highlight are small businesses. Now, in the publicly traded space, this could be $15 billion and down, so it could still be very large companies. But much like the growth side, small companies don't want to stay small necessarily. So they grow by acquisition, they grow by building more locations. In your world, think of Caliber or Crash Champions. They are growing the number of locations. They are buying existing, they are building new. Well, all of that costs money. So if borrowing costs are higher, if it is uncertain what the future might be, if it's more expensive for you to buy equipment or take out loans, then that could slow your expansion plans that you might have. In certain industries too, it could slow your opportunity for, is a large company going to come down and buy you? So if you're a pharmaceutical or a biotech company, is it less likely now that Eli Lilly or Merck or Pfizer is going to buy you because they are going to control their spending when there are times of uncertainty that are out there? So you have less customers potentially, but you also have less potential acquirers or purchasers, which impacts your share price more. So all of these things will impact the changes of shares. We have no idea what will happen over the next 60 days. Okay, but it's important to know that issues that come up like this, while tariffs are new, there are very regular occurrences that will cause the price of shares to fall. So over the last 40 years, these dots in red that go back to 1980 will show you the lowest point during the year that the S&P 500 was currently trading. So in every year, we've got a year that's negative. Sometimes they're very strong. So think of the financial crisis of 2008. We were down 49%. We ended the year down 38%. So these numbers in gray were what were the full end of year performance for the largest 500 businesses. Sometimes those snapbacks are very extreme. So if you think of 2020 when COVID hit, we went down 34%, but we ended the year up 16%. When you ask people when they are most likely to make a change, the answer you universally get are going to be when they feel these moments. You are going to be most inclined to make a change when your account is oftentimes at its worst, because you feel like you need to make a change. Okay. One of the best financial books that I've read, I would encourage everybody to read. It's written in very plain English, but it's a great way to think about investing, saving, owning a company. It's called The Psychology of Money. It's like $15 on Amazon. Morgan Housel, who wrote it, is a reporter, but it tells some very good stories on if you are going to own a business, what are the trials and tribulations that you are going to have, not just in your private business, but owning publicly traded companies. And I love this quote that he gives. It says that the price of investing is not a cost that we will pay necessarily. It's not dollars and cents. The price that we pay when we invest is that feeling of when we were down by that red dot, what do we do? Do we sell it? Right? If you're a business owner and someone comes in and offers you a 20% discount on what you think your company is worth, or what you know your company may be worth a year from now, do you take it? Do you automatically sell because someone offered you that 20% discount? And it makes sense if it's a house, if it makes sense if it's a vehicle, it makes sense if it's a private company. But most investors don't think of their ownership in these very large, publicly traded great businesses the same way when they see the price go down. Okay. And so what I would say is time frame really matters. We need to think about, when are we going to be using the money? If you have money that you're not going to use for the next 5 years, you do not care about this market volatility. If you are saving into a 401k plan, every paycheck, when you put your dollars into that 401k plan, you are buying shares at a reduced rate. So the volatility does not bother you. Where it is going to bother you is if you are someone who is going to consume and spend those dollars in the next 1, 2, 3 years. Okay, and those are the people where you want to not make reactionary decisions, but you want to make thoughtful, long-term planning on, where will I spend my first 6 months, my next 6 months, the first 1 to 2 years of income, and you want to make a plan for that. So if anybody has questions, I would like to just encourage you to reach out and meet with me. Send me an email. I would be happy to have a Zoom call. If you're invested in the multiple employer plan through SCRS, I can pull up your account balance. We can look at that together. If you are an owner of a business that offers a 401k plan but has not been using the SCRS offering, I would encourage you to reach out and have us take a look at it. We have 40 businesses now that have banded together to offer reduced pricing. We have a very competitive cost structure, and employees have access to a certified financial planner that can help provide advice to them. If you are anyone who just has a financial question in general, please just shoot me an email. Be happy to set up a phone call or a Zoom call to reach out. So I appreciate everyone's time today. I hope that we have some type of resolution to whatever is going on right now. I will say this will not be the last issue that we will have. There will always be a next and a next and a next. I would really encourage you to look at, what are the underlying businesses that you own, whether it be the insides the S&P 500, large cap stocks, small cap stocks, or vice versa. So I appreciate your time today and hope you have a great day.